We're sat here recording on the Friday on the back of Labour losing a quite a safe seat to the Greens, and many people in the Labour camps are particularly worried for Keir Starmer and his premiership. You've recently written about how the markets have reacted to the Starmer-led government, and obviously they came in on the back of a you can trust us with the economy, a mantra. How have the markets responded to the first 18 months, cracking on for nearly 2 years soon, of this Labour government and Keir Starmer?
Yeah, well, I mean, it's been a kind of interesting time, right? Because the markets weren't particularly happy with the previous government. Obviously we saw the mini budget crisis. There was inflation that kind of rocked gilts and the stock market. So there was plenty of turmoil before. So it's kind of hard to tease out exactly how it has responded. But generally, the FTSE 100 has been going up and up and up. We have seen bumps in government bonds over fears about too much borrowing. I think especially around the first November budget in 2024, and then again more recently. It's more the policy uncertainty that I think the markets don't like. And right now it does feel like there is a lot of policy uncertainty. Every kind of big fiscal event, there's always so much discussion of which taxes are going to be changed, which spending is going to be cut or grown. And it feels very, very uncertain in a way that markets hate. They want to know exactly what's going on. So yeah, it's been a mixed bag, I'd say. We are still seeing some economic growth in the UK. The pound is doing fairly well, but I'm not sure how much markets really trust the government, which is obviously a big concern for them.
The cynic in me wants to say, is it any different under with Rachel Reeves as Chancellor than maybe it would have been under George Osborne in 2010, for example? Because there's obviously a lot of uncertainty globally. We've obviously still got conflict in Eastern Europe. America has threatened to bomb Iran.
Mm-hmm.
So we still have all this kind of global uncertainty, and obviously Trump tariffs and all of these coming in, and the British economy is very much beholden to the global economic network. How much better could it realistically be?
I mean, this is a question that I ask all the time, right? You chat to people in the city and they are very willing to criticize Rachel Reeves. But then I say, yeah, but what could we be doing differently? And obviously there are some, things that especially people in the financial sector would like. They would like it if they got their taxes cut because they believe that they could create this engine of growth. But you're right. I think there is so much of our economy nowadays really depends on the world, and especially the US. There was a really fascinating study out last year, actually, which showed that the performance of the pound and of the UK stock market actually depends more on US economic measures than UK economic measures. So if the US sees a spike in inflation, that's going to affect our market more than even the UK seeing a spike in inflation. And that's because we are such an international economy. We rely so much on the US for trade, for our biggest companies have massive headquarters over there. And yeah, it does mean that you're going to see often the UK is going to track what the rest of the world is doing. And sometimes a lot of it is outside our control.
And how much of what we're seeing as well in the UK economy is also being seen in Europe? Because obviously one of the things that Starmer and his government have been very criticised from, particularly from the right and from the Leave camp, has been closer ties with Europe. Are we seeing any kind of positivities coming out of some better trade alignment with Europe from what we had after the oven ready deal under Boris?
Yeah, it's been slow going, I would say. We had this kind of Brexit reset last year where they tried to start renegotiating some of these terms. Certainly in the financial sector, there's been basically nothing so far. There is talk about working together on digital assets, working together on banking regulation, but it's been very, very slow. And you hear a lot of complaints from people in the financial sector about this. More broadly, I think there has been some pushes towards it. But I think as well, Starmer is a bit cautious, right, about looking too pro-Europe for exactly the reasons you mentioned. He does remember that his party was seen as kind of too pro-Remain in 2019 when they were asking for the second referendum, and that he's tried to push away from that. He's made it clear that they don't want to rejoin the customs union. So it's about really balancing that fine line, and often it does mean that things are slower than they should be to actually get done.
And away from the actual inner workings of what's happening in the Treasury right now, and obviously with the, I think on the international stage, Starmer has looked fairly good, comparatively to, let's say, some previous leaders. Do you think that there is a little bit of over-exaggeration of how bad the government has been? Or do you think that actually everything is almost overcautious because of all the other uncertainty that we just have no control over?
Yeah, I mean, that's a good question. I think I think you have to remember that when the Labour government came in, they came in on what was a lot stronger, a lot weaker mandate than they originally seemed, right? They won a massive majority in Parliament, and so there's kind of this assumption that they are this popular force. But at the same time, their polling numbers weren't actually that good. It was just the fact that the Tories had completely collapsed, and the turnout was very low. So I think you have really seen kind of it was very easy for the government to suddenly become unpopular because it did not have this kind of strong backing that a lot of governments do when they come in. I think it's useful to compare it to Tony Blair's government in '97, say, which did have this kind of real popular support behind it. There was not a kind of we're sick of the Tories. It was, oh, we actually want this person. And it felt like for Starmer, his election really was just a we're sick of the Tories. And it's a lot easier to erode that support if it was never kind of positive. It was instead negative, if that makes sense. But yeah, obviously it's hard to say when we can't see the counterfactual of how the UK could have gone if they had made every decision right. There's obviously been some clear political missteps, but at the same time, like you say, it's a lot of it is out of their hands.
One of the things that I bring up, particularly when talking about Starmer's government, because actually on the whole, I think they've done a lot of good stuff that is the steady Labour stuff. Lifting hundreds of thousands of kids out of poverty, more free school meals, and I think there's less school absences than there have been in like the last 20 years or so, which are all kind of really good, steady Labour policies. They've just done such a bad job of owning the wins, and such a really good job of trying to own a debate in a space that they're not comfortable in. Small boats, I think, is the prime example. And the thing that the Blair government had was a very, very clear message on what it was. And I think a lot of the criticism seems to come from nobody really knows what the end goal of this government is. Do you think markets kind of factor that in as well, which is actually, given he's had quite a bad couple of weeks starting with the Mandelson crisis and now losing this by-election, that markets will be pricing in Keir Starmer stepping down?
I mean, I think they already were, to be frank. If you look at the betting markets, say, there was, I think even before this by-election, a 70% chance that Starmer would step down by the end of the year. Now I think that's gone up to 80. It might even be higher. So yeah, I think this by-election is really interesting, right, for how the markets are reacting, and that there's kind of two lenses to it. There's the Labour leadership in crisis. Are we going to get a new prime minister? But there's also the rise of the Greens, which I think people are kind of, have been very much off their radar, right? The Greens only had 4 MPs until today. They were not seen as kind of a big political force, even though they have been polling consistently double digits. But now, people are starting to wonder, there is a chance that maybe they will be the next government, certainly could get the most seats. I was looking at the betting markets for this. I think they're tied with the Tories now on odds that they get the most seats at the next election, which, if you had said that 3 or 4 years ago, everyone would have thought you were insane. And obviously the Greens have a very kind of radical economic policy, spending a lot more, taxing a lot more, talk of a wealth tax. And I think that will have some impact on the Labour leadership, right? I think they've been so focused on fighting the right, they haven't really thought about the fact that the left has been surging as well. I think with the election of Zach Polanski, especially, has kind of really pushed up the support of the Green Party. You're seeing with 18 to 24-year-olds now that consistently the Greens are way in first in their age bracket. But yeah, of course, if Starmer does go, whoever the next prime minister is, the markets might like them, they might not like them, right? I think they would probably want a more centrist, kind of less fond of raising taxes, of course. I think a Wes Streeting, someone like that. At the same time, there are some more radical areas of the Labour Party. Obviously, Angela Rayner, who was previously deputy leader, has been quite pro raising taxes. She was lobbying for a bank tax last year, which never ended up happening, but still kind of sent the markets worrying a little bit. And then obviously Andy Burnham, who tried and failed to get a seat. He's been pretty outspoken in the ideas that the government should be beholden to the bond market. And obviously the bond market isn't going to like that. So yeah, it's been really interesting to watch. I mean, actually this morning, what I found fascinating was that the bond market didn't move at all. The stock market didn't really move at all, even after the Labour loss, because I think it had kind of been priced in beforehand that Labour was going to lose this. But it does make me wonder. I mean, it does seem like that the UK is going on the right track. We are seeing 10-year gilt levels were, I think, the lowest they've been in a year and a half this morning. So I think that kind of stability and slow, steady march towards something a little bit more sustainable is reassuring the markets more than whatever else is going on in the political theatre.
It worries me a great deal when people like Andy Burnham and those more on the left of the Labour Party say we shouldn't be beholden to the bond markets, because it's like, take the lessons from Liz Truss, and we saw what happened, and what Labour should be doing from an ideological standpoint should be looking after working people, and working people be the sort of people who have the levels of debt that are going to be really affected by increasing gilt market yields, increasing interest rates. And it feels like there is a disconnect, and it's probably my biggest criticism of Zach Polanski, which is actually having that fundamental understanding of what the correlation between politics and the markets, and then what it means for people's pockets. And I actually think Rachel Reeves has done a fairly good job of trying to bring at least trying to steady the bond market so that borrowing is more predictable. This is what we had this massive issue over, which is the when Rishi Sunak was Chancellor, borrowed a huge amount of money during COVID, and obviously then interest rates rise in Russia. We then have gilt yields go through the roof, and all of a sudden all of our debt gets a hell of a lot more expensive. It does worry me that those on the left are kind of neglecting that side of the argument. To actually, you do need, sometimes you just need to be a bit boring.
I mean, one thing I've found fascinating is beyond just the left, you're seeing now you've got this kind of 5-party system, right, with Labour, Tories, Greens, Reform and Lib Dems. All of them are having to seriously develop their views towards the financial system in a way that they never had to. I just today I was looking at the 2024 manifesto for the Greens. The only thing to do with finance that they mention in there is to do with ESG and sustainability. There's no kind of clear policy around bank tax or, anything around that. And similarly with the Lib Dems, they've always had quite a weak financial services policy, because it was always seen that the Tories were the party of the city and then Labour were the opposition, and they were the only two that really needed to have kind of clear policies on finance. But now these parties are actually, polling in the high teens, 20s, 30s for reform. All of them have suddenly had to start developing their own views towards how they want the financial system to work, which has been really fascinating. I mean, it's the same with reform as well. They basically had to start from nothing to figure out what they actually want to do with the financial system. And you've seen, last week with Robert Jenrick, their shadow chancellor, announcing that they would keep the OBR, but that was a real discussion within the party, just because they've never had to have a view on that. When you're an insurgent party, you don't have to kind of have a full comprehensive policy on everything. Now they all do.
So Elliot, I've got the power. I'm I'm the new Morgan McSweeney, and I'm able to appoint you as special advisor to the Treasury. So you're speaking directly to Rachel Reeves, been in reporting on the city for a decent chunk of time now. What are you saying to Rachel Reeves now to give your advice on how we move forward for the next 3 and a bit years of this Labour government?
I think it comes back to what I said before. It's about stability, right? I almost feel like, it was interesting last year when the discussions around whether they were going to raise taxes on banks more was happening. Because you almost had people saying, I would rather they just say one way or the other than have this months and months of speculation. And then ultimately they decided not to. And it's the same with ISA changes as well. There was so much discussion about, are they going to cut the cash ISA limit? Are they not? Are they going to change the tax-free lump sum pension withdrawals? Are they not? And again, people were almost like, I would rather you just say. I think clearly the amount of speculation before the budget last time, the amount of leaks has like the market uncomfortable. And so I think clearly telegraphing what direction you want to go in is the best way to go, right? If Reeves comes out now and says, here is our 2-3 year plan, here's what we want to do, doesn't have to be specific policies, but a general direction of travel, I think that would be far more reassuring than any kind of singular policy.
Speaking of telegraphing a plan, OpenAI last week said they were going to commit $1.3 trillion of spending over the next decade, which sounds wonderful, but they are only generating about 13 billion of revenue a year, meaning there's a huge shortfall. This has kind of been embroiled in this massive AI and tech sell-off that we've seen hit markets recently. What is happening? What is causing this? Because Nvidia have had strong results, but we're still seeing AI being sold off.
Yeah, I mean, it's a complicated issue, right? In some ways, you can never exactly tell what's going on in markets. Sometimes they just do things and you don't understand why. I think we've had this kind of AI hype train for so many years at this point. What, 3 years maybe since the release of ChatGPT? Nvidia becoming the most expensive company in the world essentially overnight. Multiple companies reaching $1 trillion valuations on the back of AI. And I think it was always going to be the case that the market would get some fatigue over this, right? We're starting to see reports that maybe AI isn't increasing productivity as much as investors had hoped. There are also questions around the funding to keep building out these massive data centers. There are lots of issues that have kind of always been in the background, and people are kind of suddenly starting to pay attention to it a little bit more. At the same time, I think it's interesting that even if valuations have gone down a bit, they are still far, far above where they were even a couple of years ago, right? I definitely don't think this is a kind of bubble popping moment. Maybe that will come, maybe it won't. But it's more of a kind of slowdown. Once stocks start dropping 50-60%, then you can kind of call it a proper crash.
One of the things I'm seeing a lot of discussion about, particularly in the media, is joblessness. And particularly youth unemployment has risen in the UK, and lots of people talking about AI's impact on the employment market, while we're then seeing these AI stock sell-offs. Are these isolated issues? Because for me, they feel connected, but aren't really we're not seeing the connection play out.
I mean, I think what's interesting is that a lot of these companies that are going to get so much kind of, or forecasted to get so much money out of these job automations, are also the same companies that could be really at risk of job automation in the first place, right? The thing about big tech companies is most of their workforce is coders. And as I think we've seen, the best thing that AI can do is coding. Microsoft, for example, has, I'm not sure off the top of my head, but certainly hundreds of thousands of employees. If you can have a AI agent come in and do all that work for you, rather than relying on Microsoft services, PowerPoint, Word, whatever. If you can just get an AI chatbot to make you that version for free, that is a serious hit to Microsoft's business model. So it's interesting in that they've kind of staked their whole future on AI, and yet AI is fundamentally risking undermining their business model. And I think you're seeing this in a lot of companies as well.
And is this where we're seeing the kind of secondary companies that are maybe not directly AI also taking hits?
Yeah, these kind of software as a service businesses, things like Salesforce, Adobe especially, have all kind of seen in the last month or so 15, 20% drops in their stock prices. So yeah, it's a weird mix of AI companies dropping and companies that could be hurt by AI companies dropping at the same time. But I think, both of those types of companies are tech companies which have all seen massive rises in their valuations over the last few years. So in a way, yes, it can seem contradictory, but at the same time, just a general retreat from tech, which I think you have seen some investment houses do, it would make sense as part of that.
And do you think there's a legitimate conversation to be had now about a robot tax? Because this was something that people were speculating about, 5-10 years ago, about if we have true automation in the workforce, do we have to start putting a robot tax on there to essentially fund the people who are going to be dependent on a welfare state because their job isn't going to exist anymore? Do you think we need to have that conversation again?
I was part of that conversation at the time. I was kind of fascinated by autonomous vehicles, and I could see, millions in the US. I remember there was 2 to 3 million truck drivers, and suddenly, if overnight all of them became unemployed, what would we do with them? And I thought it was a really interesting academic question at the time. I think what this has shown us is that job automation is a lot slower than we might expect. We might have agents that are perfectly capable of doing plenty of people's job, but it takes so much time for those to filter through institutions. We might have had self-driving cars pretty effectively for the last few years. You see Waymo in the US, but not a single job has yet to be replaced by someone who would drive a car, right? I think regulation takes time to change, institutions take time to change, and what people are familiar with takes a long time to change. There's a lot of kind of sensationalist reporting out recently about this idea that we could see millions and millions of people unemployed in the next 2 years because of AI. I hate to, make a big bet that could go wrong, but I don't think we're going to see kind of this mass unemployment that people are predicting, certainly not in the next few years. 10, 20 years down the line, who knows? But things do just move slowly in the real world.
And speaking of things moving fairly slowly, Rachel Reeves is going to be giving the spring statement next week. Actually, the day this goes out, she'll be giving it. And traditionally, this has been a budget. It's been the spring budget, but we're not seeing that from Rachel Reeves. It's definitely been muted. Yeah. What is happening with this? Why have the Labour government decided to kind of go for this one budget a year approach?
Well, this is something they've always been targeting, actually. I think it was the IMF originally that recommended this, that we should only have one fiscal event a year. In the US, in most countries, they only kind of have one budget a year. And that's the way we used to be as well. The spring statement used to be a very boring affair where we would come, give the models, maybe tweak a little bit of tax, but the budget was kind of the real event. But because of, the constant turmoil and chaos of the last however many years it's been now, the spring statement kind of evolved into a second budget. And I think Reeves has always been very keen to go back to how it was, to have November be, or sometimes October or November be the big event, and have the spring statement be a bit of a nothing burger, right? And it seems like she's managing to pull it off. There hasn't been any leaks of big tax moves that are coming. I think they purposely tried not to make any tax moves. Part of that was because at the November budget last year, she managed to build in so much fiscal headroom that even if some tax returns came in less than expected, or some spending was a bit more than expected, she had that headroom to not have to raise taxes or cut spending. So that was a purposeful move on her part. But also because, as I mentioned before, so much of the market volatility in recent years has been around budgets, has been around the spring statement. There's always so much kind of concern about what will be in, what changes will be made. And I think they're really consciously trying to avoid that this year. And I think fairly successfully.
So what are we expecting to hear? Because it's been a fairly quiet news agenda in terms of what we expect to see at the spring statement. I'm expecting nothing. I didn't even have it in my calendar. Is there anything we should keep our eyes peeled for?
I mean, I think part of it has been that politics has been plenty busy in other areas as well, right? I always think that the reason why there's so much speculation with the budget is because over summer people get bored and they want to try and speculate about things. But yeah, we're really not expecting much. You know, there might be some small tweaks to something like entrepreneur incentives or something like welfare changes, but it will be very minor, if anything. The one thing that I am starting to hear whispers about is changes to the lifetime ISA. Reeves did announce in the budget last year that they were looking to make changes to the lifetime ISA to make it more in line with first to buy option rather than saving for your pension. That consultation has been going on. We've been expecting it any day now. And originally I had been hearing the end of February. Obviously that has come and gone and no announcement. So a lot of people are starting to think maybe it will come in the budget. We don't have any kind of certainty on that, but it would kind of make sense.
So just give me an idea of what you think those changes might be to the lifetime ISA, because it's been a 25% bonus from the government every single year that you put money into it. What's going to replace that, or what are the rumors you're hearing might replace that?
It was always a controversial product from when it was first introduced by George Osborne. This idea of a 25% exit tax from trying to withdraw your money for anything other than buying a home or using it as a pension was always questionable. I think as well the £450,000 limit on being able to buy a house was obviously quite out of date. I know plenty of people in London who are first-time buyers and unable to use their lifetime ISA because of that limit. So I think the plans are to get rid of the exit tax and get rid of the £450,000 limit. Who knows what number they replace £450,000 with? We'll see. And then to circumvent getting rid of the exit tax, the government won't be giving a 25% bonus every year. Instead, they will give 25% at the end when you withdraw your money, where if you're using it to buy a first-time property. That's what I'm hearing. It seems like that's the direction that the government want to move in. So it would make sense, but obviously we don't know anything for certain yet.
And the idea behind that would be essentially kicking the can down the road in terms of having to pay that 25%. Is that right?
Yeah, I think it's a combination of that and also the frustration of having to get rid of an exit tax while at the same time wanting to give a bonus, right? Obviously, if the government is giving you this 25% all the time, then having that bonus withdrawn naturally means you have to put some kind of exit tax on it. So I think this is kind of their way of getting around it, but obviously also it is good for the Treasury in that they have to pay out at the end rather than at the start.
Just for your personal opinion, do you think there is actually much point of having these upper limits on what you can spend on that first property? Because what we tend to see in the property markets is if you put a limit of 450,000, like they did with the help to buy loans as well, put that upper limit, all the house builders build houses for that amount. Are we actually better off just not having a limit and just going, if you haven't bought a house previously, i.e. your details are not on any land registry documents, you can use it?
Yeah, I mean, clearly there's an argument for that. I think as well, no matter what they do with it, there has to be some kind of regional price disparity taken into account, right? If someone is buying a first-time property in London, that's very different from buying it somewhere up north. You know, houses can go for 3 times as much here for the exact same one as they can up north. So I think that the government is clearly cautious because they don't want it kind of being exploited for some rich millionaire buying a £5 million house as their first one. But at the same time, there needs to be some kind of matching to inflation, perhaps, matching to regional disparities, whatever else. Clearly, the kind of set 450,000 limit was never really fit for purpose, and it's become even less so over time.
Just one thing before I leave you that I wanted to get your view on. There's obviously been this Plan 2 student loan row that's been going on now. I'm very fortunate. I was on the three grand a year repayment, so it hasn't impacted me as much. But my wife was the first year of Plan 2.
Yeah, I am also Plan 2.
I was going to ask. So what does this mean? Because again, this comes back to my fundamental belief that Labour don't appear to have a kind of end goal for any of the policies that they're bringing in. My view of it, as a former Labour member and somebody who worked for the party, has always been, you're the party of the working class. So anybody who is in work, you should be representing them in government. For me, this feels like a fundamentally rejecting that principle, because you've got all these working graduates who you're basically saying you're going to have an increased tax rate on a social contract with the government you signed 10 years ago almost now.
Yeah.
What's your view as someone who's on that Plan 2 repayment? And I'm guessing, a lot of people will be on it. Is there a lot of anger? Do you feel let down by?
Yeah, I mean, I think it's interesting how this has evolved, because the Tories kind of really latched onto it, and it's kind of exploded out of nowhere. I do think the issue of high interest rates is a problem, but at the same time, it's certainly not the only problem with the student loans, right? The insane numbers of it, tens and tens of thousands of pounds in debt. Some people I know, £100,000 in debt that will just kind of never be paid back. The freezing of limits of repayment is also a problem. There's so many issues with it that have kind of been kicked down the road by successive governments. I think this is one very, very small area that the Tories have been focusing on, specifically on interest rates for higher earners. I think obviously that is a concern, but as Martin Lewis said when they got in an argument with Kemi Badenoch live on TV, as one small part of the problem. So yeah, it has been frustrating, and I think it's clearly something that students and ex-students deeply care about, because you see that money coming out of your paycheck every single month.
And again, I'm going to give you the special advisor role. What are you saying to Rachel Reeves ahead of the spring statement, particularly if on this student loan issue? What would you advise her to do?
I'll be honest, I'm not an expert on student loans. It's not my area, but instinctively I would say that clearly they need to do something. Sitting around doing nothing is pretty terrible for optics. You're seeing government ministers going on TV openly saying that the system isn't perfect, and they use the excuse that, it's what we inherited, which I understand it is, but at the same time they have been in government for a year and a half at this point. I don't know the exact fix, whether it's getting rid of the system entirely, or at the very least curbing how expensive the interest rate payments are and how soon you have to start paying it back out of your salary. I don't know, but at the very least they need to do something to make it look like they are taking the problem seriously. Otherwise, the Conservatives will own this issue, which, considering Labour is far more likely to be supported by graduates, that's a bad look.
And what are you working on currently, and where can people find your writings?
Yeah, so on the back of the by-election last night, I'm definitely going to be writing a bit more about the Greens. There's plenty more within the financial system that I'm focusing on right now: private credit, any changes to ISAs, and just in general the evolving nature of Labour in government and their relationship to markets. So I write for Politico, so you can see my free articles. I post 1 or 2 times a month on Politico. Go check them out. You can also follow me on Twitter @Gulliver-Needham. There you go, that's my little plug.